Dow now down 28 points. Let's get to Rick Santelli at the CME. Hey, Rick.
Hi, Carl. You know, there's a lot of discussion, almost ad infinitum every day, ad nauseum, some might say, as to what are the real underpinnings of the U.S. equity markets. And, of course, when we see a dynamic to discuss this from the vantage point of, hey, the economy's doing pretty well, we get many analysts that can really back that up with fundamentals. But at the end of the day, it always comes back to the same argument. If things are really this good, why do we need the training wheels on? So we're going to dig back again to try to put some a sharper pencil on what really is motivating stocks. And I really do think that all roads do lead to the Fed. So let's start at the beginning. Roughly, there's about 21 primary dealers. Why do I bring this up? It's the likes like the Goldmans, the UBSs, the Morgans, the HSBCs. These entities are the only entities allowed to play in the game called POMO, Permanent Open Market Operation. So almost on a daily basis, we see the Federal Reserve comes in and it makes bids for paper, either newly auctioned or recently auctioned. That's in the hands of the primary dealers. The primary dealers give the Fed securities, and the Fed gives them money, and for the most part, it's that money we want to pay attention to. Now, this is a chart prepared by WallStreetExaminer.com. And it's a great chart, but we're going to keep it really simple. This blue line basically represents what we call the SOMA growth. What's SOMA? SOMA is where all the purchases of the Federal Reserve, that's the portfolio, that's the part of the balance sheet, you can see them on. So among other things they own, a big driver of SOMA balances are the mortgages and the treasuries that are being purchased by the Federal Reserve. So you can see the crisis right here in 2008, and you can see that the Fed's balance sheet was roughly about $500 billion. And I think that is important to pay attention to for the following reason. Here was basically your first QE in December of 2008. Here's the price of stock. So first QE, look at the stock market. Second QE begins around 2010. Look at the stock market. Look what happens when they pause, by the way. The market goes flat. Look what happens to equities. QE2, equity markets. MBS reinvestments begin, you get another bump. QE3 settles, you go flat. Boom, QE4, you go higher. I think it's pretty clear if you look at the blue line, especially after the credit crisis, and you look at the market, that the lines are fairly synonymous. Enough said, and one more thing. Who does business with the 21 primary dealers? This is a close-ended group. So basically, I know I'm not getting loans and money reconstituted through arrangements with Goldman or Morgan. So not only are primary dealers the only transmission with regard to QE, it's those who have financial relationships with the primary dealers that are, in essence, the entities that are goosing the stock market. Carl, Kelly, back to you.